After the shake movements that we had in the previous week after Trump's announcement about tariffs, this week the main events are the USDJPY, the RBNZ interest rate decision, and the UK GDP. Hello everyone and welcome to this weekly technical outlook. And today we are going to focus on dollar yen, New Zealand dollar, and GBPUSD. So starting from dollar yen, we can see that the market rebounded off the 6-month low at 144.55, with the next resistance coming from 148.15 and the 20-day SMA slightly below the 149 rounded number. Even higher, the next battle will come from the 50-day SMA and this descending trend line at 149.95, which was slightly below the 150 rounded number. Even higher, the previous peak and the 200-day SMA near the 151.15 level will be a challenging point to see if the market will continue the upside structure and create a bullish wave. On the other hand, a move below the 6-month low, then it may take traders until the 141.60 support and toward the 14-month low at 139.56. The RSI is pointing down below the neutral threshold of 50, but the stochastic is turning to the upside after a bullish crossover within its percentage K and percentage D line, suggesting that we may see some more gains in the market. Now turning to Q in dollars, we have the RBNZ interest rate decision, which is expected to cut rates by 25 basis points. We can see that the market had one of its worst days in 2025 and it lost around 4%. So the market is holding near the open 55.80 resistance, and if there is a climb above it, then it will challenge again this short-term uptrend line around the 0.5630 area. Even higher, the next challenging point will be within the 20 and 50-day SMAs and the 0.5710 to 0.5740 resistance, which is the 23.6% Fibonacci retracement level of this down leg here. And even higher, the next battle will come from 0.5815 and the 4-month high near the 0.5852. Also, the 38.2% Fibonacci at 0.5860 lies around these levels here, but the 200-day SMA slightly below the 0.59 round number will be the next key level to watch, and if there is a break above it, then it will open the way for more upside movements. Now looking at the technical oscillators, the MACD is holding beneath its trigger and zero lines and is extending its negative momentum, while the RSI is pointing downwards below the neutral threshold of 50. And having a look at GBPUSD, we can see that the market found strong support near the 200-day SMA, which is standing around the 1.2812 level, and also near this short-term uptrend line and the lower Bollinger Band. So a movement above the mid-level of the Bollinger Band, which stands near the 1.2950 level, then the price will have another fight with the upper Bollinger Band around the 1.3050 level and even higher with the 1.31 psychological number. It failed in the preceding days to have a closing session above this level, so if there is a day above this line, then it will open the way for a new bullish wave until the 6-month peak of 1.3208 and the 1.3235 resistance. However, a move below the 200-day SMA, then it will open the way for more bearish movements until the 50-day SMA at 1.2760 and the 1.2730 support. The MACD and the stochastic are endorsing a bearish movement in the market. The MACD is still holding beneath its trigger line and the stochastic is approaching the 20 level. So that's all from me. Thank you for watching. Have a great day.